Good afternoon, everyone. I am Patrice Power, and I'm Marketing Director for Calyx Software. I'd like to welcome you to our HMDA Compliance webinar. Thank you for your interest and for taking the time to join us on this really important topic for your business. Before we begin, I want to take just a moment to personally invite each of you to attend our upcoming National User Conference, Calyx Vision 18, to be held, as you can see, in San Francisco, February 11 through 14, 2018. So I encourage you to visit calyxvision.com to learn all about the conference and the benefits that we will be providing for you and your business. So turning to our webinar, the information presented today is confidential and proprietary to Calyx and QuestSoft. During the presentation, everyone will be on mute. Please feel free to enter any questions that come to mind into the questions area that you see on the right side of your screen. And as time permits, we will answer questions at the end of the webinar. If your question is not answered during the webinar, we will then send a follow-up email with responses. So today we will review the data collection method inside Point, discuss considerations and concerns regarding the new HMDA regulations, and demonstrate the reporting process with our integrated service provider, QuestSoft. So our presenters today include Janice Smith. She's a senior sales representative with Calyx, and Janice has an extensive business background with a strong focus in the mortgage industry. Her roles have run the gamut from origination to compliance to managing a mortgage banking branch. She's been part of our Calyx family for 5 years, and her contributions here at Calyx have been very extensive and impactful. Leonard Ryan, the handsome man to the right, is president of QuestSoft, who will also present today. Leonard's leadership at QuestSoft has resulted in many awards, including Mortgage Technology's Top 50 Service Provider Awards annually since 2009, the Lender's Choice Award, Tech All-Star Award, and Top Workplace Award presented by Orange County Register. He's a member of MBA's HMDA and NMLS Mortgage Call Report Working Groups, and is a frequent speaker at trade associations and mortgage software conferences, and a highly valued Calyx integrated service provider. We sincerely appreciate both Janice and Leonard joining us today to share their wealth of knowledge. And now I will turn it over to Janice.
Good afternoon, Patrice. Thank you for that lovely introduction. I really appreciate that. And you should be seeing my screen right now with the Point software open. I hope that you are. So I'd like to say good afternoon and welcome everyone to the webinar today. I really appreciate the opportunity to participate on the webinar today, and as we are getting prepared for yet another regulatory change. Of course, I'm speaking of and referring to the new HMDA reporting beginning 2018. So as we get started today, first and foremost, I want everyone to know that this is just the beginning of what Calyx Software has planned to keep our customers in the loop so that you can be confident that your Point software is definitely ready with the additional required fields. So let me go back to the fact that we want you to feel confident that your Point software is definitely ready with the additional required fields for the changes of HMDA reporting. So the actual demo itself today will be very quick, and so you don't want to blink. As you can see, I'm currently displaying a Point file, and to access the screen, which I'm on right now, the HMDA screen, then I will go up to the track, and we're going to go to HMDA, and this time you're going to choose the HMDA Reporting 2018. This will take you over to the new screen that has all of the different data fields. As you can see, I have some fields here that are highlighted. That's indicating that I have some missing information, and if you have the Point Central version, then you understand that this is because I have a business rule enabled in my Point Central admin. So this is going to be the same as any other fields that you have business rules enable that you set for the process, helping to ensure that the data necessary to generate the HMDA 2018 report will be completed. So I'm going to go ahead and input the address, which is missing. And we'll get that in here so we can continue on and go ahead and save the file. Okay, so now that we have that completed, on my screen, there's a couple things that I want to point out. So up at the top right, you'll see the lender case number. And then right under that is going to be your LEI number. That is the legal entity identifier. And you will need to have both of these fields completed in order to generate the ULI, which is the Universal Loan Identifier. So as I understand, some companies may use the same LEI for all their loans, and if this is the case, then you would be able to actually add that in and include that on a master template, which would then automatically populate on each of your loan files, and that would eliminate the need for you to manually input the LEI on each file. So next, we'll go over to the left under the close date, and you're going to see some information here. It's this box that is labeled Fixed HMDA Loan Application Register, the LAR. Now, we've already identified that this wording may be confusing, so I've been told that in our next point release, it is already planned to change the wording. So it will be called Finalize HMDA Data, and at that time, when you go ahead and check the box, then it will actually lock the screen. So of course, there's a lot of information. As I scroll down, you'll see that just like in the other screens in your point file is going to automatically populate the information over into the fields, during the regular process of the loan. However, in the middle of the screen, you're going to now see there are some drop-down options, drop-down box, and you will choose the data from this drop-down list to complete that data field. And Patrice, it's my understanding that Calyx actually plans to start scheduling additional instructional webinar trainings to walk our customers through this process on how to actually complete the HMDA Reporting 2018 screen in their point files correctly, so they'll have that done correctly.
Yes,
so,
we will be having some training webinars, you're correct, later in the year.
Well, great. Thanks for confirming that. Appreciate that. My main objective today was to show our customers that software has been updated to include these additional fields for HMDA 2018, and this will be done, or actually it's already in there if you're on the current version. And with the access to these fields, you will actually be able to start testing the process so that you can go ahead and identify if there's any business rules that you need to add, and also changes to your internal processes that you feel would be necessary for this upcoming regulatory change. So I hope I've been able to do that today. And one other mention is that the additional enhancements for the HMDA 2018 reporting will be available in the last quarter of this year in our upcoming 9.7 release. So with that, I want to turn it over, the webinar over to the real star of the show, which is going to be Leonard Ryan with QuestSoft.
Thank you so much for that. One of the clarifications I did want to make, there's going to be a number of changes between now and the end of the year on everybody's side, because this now starts the testing process for everyone. But in the case of what we're showing today, if you have version 9.6 installed, you can actually perform the import into our system, and we can actually do the testing and everything that's necessary. And I'm going to go into more detail of that towards the end of my part of the presentation. So in regards to in regards to what we're taking a look at today, there's a lot of stuff to go through that you internally are going to also need to prepare for. So I don't know how much you've either read. It's not like everybody wants to read 950 pages plus the additional 250 pages that come out after that. But there's a lot of differences in the HMDA that's coming up and the current HMDA. So let's go ahead and go through a number of the things. The CFPB last year, in one of the MBA's essentials, did mention that they expect a 40% increase in covered transactions. A number of people do not have to submit HMDA any longer. A number of people are being added. So the combination of those two is actually the difference in terms of what's being looked at. In addition to that, there's quite a few things that are on the plate in terms of what will be included in that area. There are some major challenges that are remaining for HMDA. So these are somewhat outside of what Calyx is able to do and what we're able to do as a HMDA processing system, HMDA submission system. There are some topics that basically you need to kind of decide or the CFPB needs to still complete in order for part of this to take effect. So one of those that was mentioned earlier, Janice had mentioned the calculation of a universal loan ID. One of the reasons it needs to be somewhat flexible is because under the new HMDA, there's a big difference in terms of who actually assigns that ID. So it's the company making the credit decision. Credit decision has always been one of the key elements of HMDA. But regarding if you're a broker or you're a lender or how it's going to be for the HMDA side, there is going to be a number of issues that are associated with that. And just going through the testing process and going over what you have in terms of contracts with investors and with the people that you do business with will really decide that in regards to that. The demographic information is going to be a challenge for your loan officers, for the mortgage loan officers, because there's a significant amount of additional subcategories. It also may be something that needs to be considered if you're using online internet applications and at what point in time you want to start collecting information in regards to that. If you're using systems outside of Calyx Point, there's a possibility that there may be some delays. We have a number of companies that use our software and will import from Point on one side and will import, let's say, for consumer commercial loans on another side. And what you're seeing today is all operational. So on the Calyx Point side, this is not future software. This is software that you have available actually right at the moment for you. But that may not be the case with other systems that you're using. The internal training is going to be especially important. There are some things that I'll tell you that we're offering for our customers free of charge that will go ahead and help you out with a number of those type of areas. And again, these are issues that are challenges. The validity and quality errors just was released. So, with TRID, we were dealing with a situation that, and ATRQM and all the major things that we've had. The CFPB traditionally sends out gobs and gobs of pages of paperwork on a regulation. And then there's things that are filled in as you approach the regulation itself. It's, things you have to kind of overcome, you talk through, etc. In regards to the validity errors and quality errors, those were delayed significantly, and even now there wasn't anything that was electronic. We've assigned our programmers to do basically round the clock adding them, and the good news is that we're able to start testing all of those things now, but it was much later than the CFPB had indicated that they were looking to put those out. In regards to submission, they're showing how to do that right now, but they're not giving any access for anybody to actually do the testing. So there are some things that are going to happen throughout the end of the year. And then you see the other things that we have talked about there. Just to illustrate the difference between today's HMDA that's going to be submitted in year 2017 in 2018 by March of next year, and what needs to be collected as of January 1st of 2018. The green areas that you see on the screen in front of you are the areas you're collecting today. The areas under the white are the areas that you're going to be collecting as of January 1st, 2018. So there's a significant difference. Part of those were required by the Dodd-Frank Act. That's what's in the middle there. The other, the CFPB just got together, had some internal talks, and said, let's ask for all this additional information. Community groups wanted it, they wanted it, the states wanted it, etc. So there are significant increases in the amount of what you're going to see. And just to illustrate that in a screenshot here for you, the difference that you're going to be taking a look at, what you're seeing today is in compliance relief, our product, what we collect in terms of HMDA. And what you're going to be seeing in just a second on your screen is what is now going to be collected under the new HMDA. Rather significant difference overall, and that's the reason why you also saw the screens in point expand and what the differences that they have. In regards to some good things about HMDA, there are some stuff that's improving. So the rate spread, there used to be this area that you had a calculation, and sometimes you would report something, sometimes you wouldn't. Sometimes there were issues in regards to how we can figure out if something is a investment property, because they only allowed non-owner and owner-occupied. They didn't have whether or not something was a vacation or a second home. There were areas that it was tough to figure out some things. And we as a company, for example, collected additional information off the 1008 in order to figure out that information. That now is going to be part of the normal HMDA. There's also some other things. There was an error that was constant under the 2004 to 2017 HMDA that's being eliminated in regards to a quality error that always happened when somebody was doing an FHA streamline refinance. Some of the other things in regards to that you might want to know about: when is the new rule effective? The new rule is effective as of January. Most of the things are effective as of January 1st, 2018. Things that are effective today is if you had less than 25 loans, closed-in loans, then you no longer have to submit a HMDA report. A lot of credit unions, a lot of community banks had situations where they had that particular threshold. Most non-depositories, the threshold was already at 100. So whether or not you were included that way or not, didn't make that big of a difference. In terms of quarterly reporting, there will be a quarterly reporting requirement for financial institutions that have at least 60,000 LAR records in the previous year, and so that's not going to take effect for a couple of years. The other difference is that this year's data submitted between January and March 1st of next year is going to be submitted to the CFPB rather than submitted to the Federal Reserve Board, or what traditionally has been known as the FFIEC software. There is an official questionnaire, nice and colorful, that goes down the list, but I can tell you right now, for the most part, it works out to be, are you a nonprofit or a for-profit? If you're a for-profit, you can go through all the lists, but when it comes down to it, it's, are you doing 25 loans or more that are closed-in loans? We'll go into a change that was made. The next slide basically illustrates what the qualifications for the new HMDA are. The first qualification is closed-in loans, which has been traditional of what you've been doing. So first trust deed, Fannie Mae, Freddie Mac, a normal second trust deed that has a that has a specific payment and doesn't allow you to draw or add more to that particular loan. So those particular loans, 25 in each of the last 2 calendar years. Now, there was some questions in regards to whether it was going to be either or each. In the new revisions that were just made about 3 weeks ago, that was clarified in terms of it will be each of the years. So if you had 25 loans this year, if you had 25 loans last year, or the last two, excuse me. In 2016, if you had 25 loans, in 2015, if you had 25 loans, then for 2017, you have a submission requirement. Same thing goes as you're moving forward. There was a major change as a result of the most recent 250-page release that the CFPB made. And that was originally there was a 100 record threshold for HELOCs and open-end lines of credit. That has been increased to 500 for the next 2 years, so 2018, 2019. We'll see if that remains for 2020. But the Bureau decided that they were going to go ahead and keep those loans out of the overall calculation for now, and give a little bit of relief for community banks and credit unions that may have smaller amounts in regards to that. Data submissions, it really hasn't changed. You still have annual submissions. It works the same way. When the quarterly submissions come around in 2020, it's going to be that you submit your loans quarterly, and then you're going to have an annual resubmission, essentially, of all the loans. And that will allow you to correct anything that may have changed during the quarterly. So it's almost like a tax return, so a self-employed borrower. You pay quarterly in terms of deposits, and then you have the final reconciliation with a tax return at the end of the year. Same thing goes in terms of this particular side. So I want to get into what is going to be a hot topic, immediate kind of topic for you. And right after this series of slides, we're going to talk about brokers versus lenders. So, but I want you to get the concept of this first so that you kind of understand what's going to be thrown at you very soon here. So Janice mentioned a legal entity identifier. Under the new HMDA, every institution that submits HMDA is required to have this new legal entity identifier. The legal entity identifier has been something that's been out for quite a while. It's administrated in Europe, and this has been used to date by financial institutions who are doing international transactions back and forth. So if you're a bank, there's a very high probability that you may already have one of these. And then the decision is if you wish to get another one or not. The legal entity identifier is unique to your institution. It costs $200 plus a processing fee. So it's basically $219 is what I've heard most people pay for this. It does have an annual renewal that's associated with it. That I believe is in the $100 range. And right now there's two major ways to get it, and they are on your screen here. One is to go directly to the source, which is the gmeiutility.org, the entity that runs that. There is a little bit of research that's done on your institution, make sure that it's legitimate, etc. So there may be some stuff that comes back in terms of qualifications on that particular side. But this is unique to your organization. The other is that if you currently process through MERS, if you're a member of MERS, then they also have a process that basically fills in a lot of the paperwork in advance for you based on the information that you currently have with MERS. So this is a 20-digit alphanumeric identifier. It is not something that you want to write every time, because it will be something like, 20AZ 42B, etc. So it's not going to be something that's easily readable for the average person. That legal entity identifier is going to be combined with a unique loan number that will be assigned by you as your institution to come up with the universal loan identifier. So it's the combination of the two that creates a 45-character overall legal entity universal loan identifier that will follow your loan from funding all the way until it's finally paid off years from now. And the idea behind this is that right after the financial crisis, this was a direct result of the financial crisis. So right after the financial crisis, all of the people in Congress got together and they wanted to figure out who to blame. And so they agencies up, they bring independent companies up, and everybody, the first question was, where are all the bad loans sitting? And nobody really had an idea of where the bad loans were sitting. We knew where some of them were sitting, but you didn't know where all of them were sitting. So part of this new process is basically, if there's another financial type of crisis, that you can see where those loans are. You can look at the HMDA report, the most recent HMDA report, and as loans get purchased, this universal loan identifier will be required as part of the purchase of the loan so that this loan gets followed. The other thing that will be followed along with it is the NMLS mortgage loan originator's ID. So that particular part will follow, because the other problem that they had was wondering if somebody was originating a particular type of loans, and then after they messed up one company, they just moved on to another company and started off with a new one, and they want to be able to basically follow the loan officers all the way through the process. So who assigns this? So the actual action codes are not changing. So you still have action code 1, which is called loan originated. You and I, on a daily basis, refer to this more often as a closed loan or a funded loan. But in HMDA terms, it's an originated loan. So we think of that more that an application came in. They look at it more as you made money. So if you're a retail correspondent, you're the ones that actually are funding the loan and moving forward from there. You're assigning the universal loan identifier, and that's going to be your responsibility. The company that buys it from you, the financial institution that buys that loan from you, is going to report it also, but they're going to report it as action code 6. Being an action code 6, the legal entity identifier isn't going to match up with them, it's going to match up with you. So from that, they'll know who coded it as a code 1, and essentially as the originator of the loan. So this is the main part that you have. So last webinar that we did, we had a number of people who were brokers, lenders, / mini correspondents. We had just a whole variety of folks. So what I want to do is kind of go over this from what it looks like from a HMDA perspective. So the key question in every HMDA decision, HMDA in who reports what for HMDA, is always based on who made the credit decision. And I put a series of questions right after this for you to take a look at. So if you fund the loan with your own money, most likely you're the lender. If you're funding it with somebody else's money, are you delegated underwriter? If you're not, and you do underwriting, but you're non-delegated and you have to send all your loans into somebody else to, quote, make the actual credit decision, then you're not going to end up reporting those particular loans. You may end up reporting loans that you deny, but you may not end up reporting loans. You're going to, for HMDA purposes, be considered a broker. So this is really, and then who assigns the universal loan identifier and who sends out statements of credit denial. So this is going to be very important. If you consider yourself a lender today, you publicly go out as a lender, and you're not actually making a delegated credit decision and not on the line for what's going on, you probably need to get together with your investors and you need to figure it out, because your contracts with your investors will determine who assigns this ULI as you go through. Now, there is one exception. The idea behind the universal loan identifier is that you should never see it twice on your HMDA report. There is actually an exception to the rule on that, and there's a little caveat. And what that is that let's say you originated the loan, you reported under code 1 as a loan originator on your side, you assigned the universal loan identifier, you sold the loan to Fannie Mae. Fannie Mae, 3 months from now, goes ahead and decides that you should have that loan for yourself. You take back that loan, it's in the same calendar year, and now you either portfolio it or you sell it off to somebody else. You actually, in that particular case, would have 2 transactions. One is for the purchase of the loan, one is for the original origination. Let's say you sold it off to somebody, and months later, they decide to put it together, your loan along with a whole bunch of other people's loans in a pool, and you buy the pool of loans. You could end up buying your very own loan back again. So that's kind of the exception that you have in this particular case. I want to talk a moment about there's a new universal residential loan application. It's not going to take effect as of January 1st of next year, so there are some things that we kind of have to do in regards to accommodating some stuff in HMDA for next year. But when it does take effect, I wanted to kind of go over areas that the new loan application, when it is finally released and it's made a part of the new origination process, things that will directly be related to the HMDA side. So in the loan origination information, the NMLSR ID, that one will be reported under the new HMDA. In regards to the age issues, that's going to be something that's reported under HMDA. In 4A at the bottom there, you see that you now have primary residence, second home, investment property. Again, that's been on the form, but that's not been part of HMDA. Underneath that, you have several questions that are yes, no. Those line up with yes, no questions that are associated on the HMDA side. In regards to other information, there's a new mortgage loan information section. And on the new mortgage loan information section, you have information in regards to loan features. You see on the left side towards the bottom, there's a series of check boxes. Those check boxes are aligned with new HMDA check boxes that need to take place. And then there's also things in regards to the title information and the type of documentation that your loan is that will also directly affect the HMDA. And then the final area that is a major change that in the new URLA will be the information that's changing. We refer to it today as government monitoring information. The CFPB found in their studies that people thought government monitoring information was a negative term. So they've decided to change it to demographic information and make it less threatening to people to put in. Of course, at the same time, they added all kinds of new categories to make it more threatening. So there's kind of a trade-off there in regards to some things. So things that are changing. You now will have subcategories as of January 1st of next year. You will have these new subcategories in addition to what are called the aggregated categories. The aggregated categories are not changing, but the subcategories are. And so in addition to that, you also have individually, you're going to have to indicate if you collected any information based on visual observation. That kind of stays in line with what you do today, where you have, if they say I did not provide this information, you're still supposed to provide it based on looking at somebody. The difference is that under the new HMDA, that's going to change to be reflective of whether or not you collected, what areas that you collected. You're only allowed to collect the aggregated information, which is what you do today, but these subcategories have to be somehow made available, and that's where some training issues and some other things are going to take effect. So, talking about the demographic information, in regards to all the fields of the new HMDA, as of January 1st, 2018, you have to have all of those fields in there with the exception of the demographic information. That's the only place where you have an option. You can either put them in and collect them before the end of the year, or you can collect them after the beginning of next year. Anything that's collected if you open a loan as of January 1st, 2018, you need to offer the ability for your borrowers to collect this additional information. If you open the loan in December of this year, it's an option. You can either collect it or not. If you close the loan this year, you would only report what are called the aggregated categories, which is what you're used to: Asian, Black or African American, Native, Hawaiian, etc. If you closed it next year and you collected the information this year, then you would show the categories that they collected. You are only going to have 5 of these that can be submitted to the government. So if they collect information on and it's up to the borrower which things that they wish to check. So if they, for example, checked Asian too, that's a category that we're used to people checking today. If they didn't check Asian and they checked Chinese and Filipino, then the way that it's actually going to be reported is the primary aggregated categories first. So American Indian, Asian, Black. If those are selected, those get calculated first. Let's say 3 of the 5 were selected, because you can't select all 8 there. 6, 7, and 8 exclude the rest of the categories, so you can actually only select 5. But if you selected 5 there, then you're done. There is no subcategories that get submitted. If you select less than 5 and you selected subcategories, then the subcategories get reported. If you selected more than 5 total, including subcategories, then it's up to you as a financial institution, or through some algorithm that the industry may come up with, in regards to what will be submitted. But the rule says that basically you can submit any of the categories, subcategories you want. I look at that as being a potential issue as we're going through. But that's going to be an internal issue. It's not necessarily something that, I mean, there's only 5. So how is Point going to program that in? How is QuestSoft going to program that in? We have some things that we're doing to help you. We're importing and we're looking to allow you to select which 5 that it is. But a lot of you are just going to look at it and say, we'd just like you to throw these particular items in there. I don't know if that's going to create long-term problems. And we're talking with big institutions and small institutions in regards to this. So it's not something that, again, we're going to solve in this hour. There is one more thing. You also are allowed free-form data entries. And that means that anybody can put anything that they want, up to 50 characters, in a data field. And if that's within the 5 that we're talking about, that needs to be submitted to the CFPB. I don't know exactly how much this is going to help or hurt the industry, but that is definitely something that you're going to look for. You see how the new codes are going to work. I would recommend that you do have the handouts area in the GoToWebinar here. You can download this presentation. I'm not going to go through a couple of these slides. I've put in items specifically for you because you're not going to remember me telling you this a month and a half from now. I highly recommend you download the handouts area if you haven't already, and have this available for you so that you're just taking a look at things as you go. Okay? On calculations for pricing information, it's going to follow, if you're doing TRID loans, this is going to be pretty easy overall. It basically follows the closing disclosure for the most part. If you're doing non-TRID loans, then points and fees are going to be the main area that you're going to be taking a look at. The next slide that I have here about some changes in determining the loan amount, I'm not going to go through all of these because, again, this is print this, keep it off to the side. I want you to take a look at the 4th one down, denied, withdrawn, closed for incompleteness. What you're going to report is the amount applied for. You may have changed the loan amount several times. You may have done all kinds of things in regards, but if you're going to report any one of those 3 categories, then you will report the loan amount originally applied for when you took the application. And you can see that there's different amounts there in regards to overall within the system of what you're going to do. In regards to another new concept, there's a concept called relied on. And you're talking about automated underwriting systems used to evaluate, but you can kind of lump the whole thing into the general basic idea. And that is, we don't care, the CFPB is saying, we don't care what you put inside a point. We care about what you actually relied on. And so if they're different, if you have one thing inside of point and you actually use something else and relied on something else, then that is what we actually want sent for HMDA. So you need to look through how you do stuff today, and by the end of the year, you're going to have to fill those holes where there might be some differences. So for example, if you use the yellow sheets of paper with the little lines on them to figure out the income of a self-employed borrower, if that differs from what's being entered into point in the system, then you're going to have a potential problem with your regulator when they come out to do an examination. That is a potential pitfall. Same thing goes with credit scores. If you're bringing down credit scores, it says that a FICO score is this and this. You have those automatically loaded in, but you did some blend of those two, or you came up with another number, then that's what's supposed to be reported. So again, these are things that you're all going to need to work out if you're not totally relying on data that's inside of your point system. Your point system will send it over to us just fine. But these are the things, how are we as technology companies supposed to figure out what your idea was in regards to this? But this is a concept that they have over universal. Those are the fields that it goes on. And here's one of those examples. Now, Tom Kearney, the gentleman who's at the bottom of this particular screen, and this is attributed to, he was one of the people with the CFPB that wrote the new rule. So he is an authority in regards to this particular rule. He left, just like all folks that seem to start off with the agency, produce a rule that you know is somewhat complicated and causes all kinds of people a lot of questions. He, like others, left the CFPB and went into private business to protect you from the rule he wrote. But just look at the middle part that's in red there, financial institution. If you are sending this to somebody else and they have a different idea of what is relied on than you do, that other idea is what needs to be in there. So you're going to need to watch those particular areas. The other thing also is on the AUS, depending on what you chose, this is the waterfall that you have in terms of the selection. I am not going to go over this slide anymore other than to say, for example, if you have an FHA loan and you did an FHA, the FHA review, and in addition to that, you did desktop underwriter, loan scorecard type of review on the FHA scorecard, then that, depending on which level, that's going to make a difference in what you show. Okay. In regards to geocoding remains somewhat the same, but it's somewhat puzzling in terms of one of the things that they did. So you currently have state code, county code, MSA, census tract, that's all being combined. MSA is no longer reported. However, MSA is pretty useful when it comes to the Community Reinvestment Act and a number of other things. So QuestSoft, for example, is maintaining those, but the actual reporting of it will be in line with what the CFPB wants. But that then brings up the question of why isn't the CFPB going and just geocoding everything if they're asking for property address? The property address, originally the CFPB was going to require all of you to get the actual parcel information and report that in a standardized manner. They found in their studies that the counties don't have similar ways of keeping track of that. So they found that that was going to be very burdensome, not like any of the rest of this is burdensome, but they particularly found that that one was going to be more burdensome. And they said, well, just give us the property address. What that does is it just, you got to watch out now for, TBDs, 1, 2, 3 main streets, all that type of stuff. If you submit those type of records with those particular addresses in it, we know that at some point in time, the CFPB, and we think it's earlier than later, they're going to go ahead and take that information, cross-check that, and realize that there was a little bit of a problem. So internally, you're going to have to watch out for that a little bit more. There's a number of people that have freaked out about the new pipe delimited format. Since you use Calyx Point, since you may or may not use QuestSoft's compliance relief, if you use either of our products, don't worry about this. All that it is that they've changed the format from a HMDA.dat file, which is a static fixed length record. They've changed it. You all know what CSV files is. All they've done is change a comma to this character that's above the backslash on your keyboard. That's what a pipe is in technical terms. Don't worry about it. In regards to the newest CFPB process, there is one thing. If you aren't efficient in your organization on HMDA, you are in for a really interesting surprise, at the beginning of the year. There will not be the ability to go and submit your information to the Federal Reserve incorrectly and then kind of make up for it later or see what the errors are and correct it and things like that. It will be instant. You go into the CFPB process if you have one error. I don't care if you have 50 loans or you have 500,000 loans. If you have a single error, it will reject your submission at that point in time. It will be instant. It will tell you you're done. You need to go back, fix that error, and come back at a later time. Same thing in regards to the quality errors, quality edits. Those things will be given to you right away. You will have the opportunity to go ahead and indicate that they are correct. You will attest, just like you do on the mortgage call report if you're a non-depository, you will attest that these are accurate and, check box and submit. You can only submit one file. You cannot submit multiple files. If you have more than one system that you're pulling from in order to go and create your HMDA report, you will need compliance relief or a product that's similar to our compliance relief. Compliance relief actually sucks the data directly out of the Calyx point files. So as a result, the vast majority of folks in the industry do use our software in regards to those situations. The other thing is that we're no longer waiting until September. The new HMDA should be out here anytime soon, the next couple of weeks for 2016, beginning in 2017, 1 month, and that are looking to go and make it available because they also saw the amount of time that it took in order to have that delayed before. What's the penalty for incorrect data? Same as what you've seen, except it's going to be faster, quicker, more automated. So just keep that in mind as you're going through. And the last part that I want to just talk about here is, in my part of the presentation, is everything is about instant fair lending. Within minutes of your information being combined with everybody else's information, there is going to be enough data for the agencies to do a basic determination of whether or not there's a potential fair lending issue or not. It will be within minutes. It will be quick. Good things and bad things about that. If you're an organization that's doing some stuff in regards to potential fair lending issues, if you're redlining, if you're doing anything where you're having differences in terms of the way you treat one category of people versus another category on the HMDA side in terms of pricing, those things will pop out very quickly. On the other hand, we've never had comparative data before to say, wait, hold it. I'm in the top like 500 or 1,000. I'm a good guy. There's other people that aren't doing something. You've always been judged kind of individually. Well, now there will be peer data that will be available, so you can figure out how you rate to everybody else. To just show you the difference in terms of today's HMDA and tomorrow's HMDA in regards to the fields that will be available for a fair lending analysis, these are the differences. Today is the left, tomorrow or next year is on the right as you go through. There are a number of CFPB resources that are available. QuestSoft has actually combined a lot of stuff. So the main one that people have noted is the one at consumerfinance.gov, which is the CFPB's official site. QuestSoft has gone above and beyond that. We've included their information, plus we've included a number of other resources. So you can go to QuestSoft.com. There's across the top, there's HMDA HQ. If you go into that, you'll see all kinds of things. You'll talk about what the ULI is, how it gets generated, what about the new data fields, what about how you do different things in regards to the responses. There is a special offer that QuestSoft has for all Calyx Point customers, and that is that if you license our compliance relief software, which we're going to demonstrate here in just a second, that what you get free with that, there's actually a site that's out there called the HMDA Academy, which has all kinds of things. You can ask personal questions. You can see charts in regards to things. You can attend other webinars to bring yourself up to speed, etc. That usually has a $1,500 fee associated with it. It's free of charge through March of 2019 to make sure that you submit your first set of HMDA under the new CFPB correctly, and it's included. We negotiated a special deal that all of our clients basically get that, and as a result, also Calyx Point customers who are using the product get that. So at this point in time, I'm going to transfer the screen, or Jenny, I guess you'll transfer the screen over to David. And we're going to actually show you, just as you saw Janice a few moments ago on her side, show you the fields that are in Calyx. What this is going to do is it's going to show you how easy and quickly we bring it in on our side on a test database. And we already have everything that you're seeing is out there on the street, except for there's error codes that we were talking about earlier, and those will be available before the end of this month. So you have 3 full months of testing Calyx Point and testing everything that the CFPB is throwing at you with your live data to see how you guys are set today. And it is a tremendous advantage. So David, go ahead and take it away.
Thank you, Leonard. Good afternoon, everyone. I'll just jump right into it here. So some of you may be familiar with Compliance Relief. Many of you may not be. This is our application. Compliance Relief encapsulated all of our products. So here down the left-hand side, depending on what you license, what you purchase, you'll have your HMDA Relief, CRA Relief, NMLS, Call Report Relief, Instant Geocoding. And then depending on the years that you've used our products, you'll have separate tiles for each year that you've licensed the product. The nice thing about that is you can immediately go to any year and run those reports for whatever reason that you wanted to see how that data was in that year applying those rules. So there's no worry about having to go back to some other version. You'll always have that at your fingertips to pull in the data and see how your data reacted during that year. The most important thing, and what Leonard was just talking about, is our CFPB 2018 HMDA Relief. And this is available now to everyone. When it becomes live after the end of the year, this 2018 tile will move up here next to HMDA Relief. But right now, anyone who licensed our product, this is free to use through the end of the year, so that again, you can get your processes in order. You can see where you might have holes in your data. So I'm going to go ahead and I'm going to click on this 2018 tile. And I'm going to go to get the data out of Calyx, you just click on Import. I've already selected my Calyx LOS, though there's many others that you could choose from. You're just going to simply browse to where your borrower records are on your network. And it may not like me because I sat here for so long. Let's see here. There we go. All right, so this is where my borrower files are on the network. Click OK. Now I'm going to see I've got 284 possible records that it might pull in. I'm going to go ahead and set a date range of action dates just so I don't get too much crazy data. And then simply click Start. It's going to go out and now you have several other options here with Calyx. If you don't want to use the default file name as the loan number, you could use the application as the loan number. So depending on how you want the data finally appear within QuestSoft, you can make a few modifications here. All right, so it's telling me it found 5 records for that date range that I pulled. And first thing that comes up is a statistics page. It just kind of shows you this is what it pulled in. 4 conventional loans. You had 1 FHA loan, etc. Now I'm going to pop off of here real quick. I'll come back to this to show you something. But here are the records that I just imported. It shows you some key pieces of information. And this is the most important column right here. Condition says has errors. So ideally, majority of the loans you pull in, it should say okay. But these are the loans that you're going to focus on to clean up your HMDA data. This file right here is the one that Janice was showing us in her system. So I'll go ahead and I'll edit this. And similar to the Calyx approach, we've included all of your HMDA data on a single page. So there's no need to follow menu items and dig around and figure out where this data might be. It's all here in a single snapshot for all your HMDA data. What you'll be focusing on here is this column over here. So it says it has errors, and this is the list of the new validity messages for 2018 that my current loan violates. So you can very easily, your goal here is going to be to get this down to 0. So and any of these, if you click on it, it will show you, you can see a little pop-up says it shows you what the message is. It's kind of fast. At any time you can click show details and it will show you that entire list and what each of the violations is. To help you along the way so that you don't have to wonder with all this many fields where it is, what you might be violating, as you click on each of these, it does highlight in yellow the field that might be missing or might have a problem. Click on total points, that one. I'm going to make that NA. So the goal is here, and let me just do a couple things, is to obviously get this list of errors down to 0. Looks like I didn't mark whether it was reverse and whether it was a line of credit. And there, now all the errors are gone. It goes to okay. I know that this file is now clean. When I save that data, it will say okay in that conditions column. And here it says okay. Just a real quick second show, just to show combinations like this one has a pre-approval problem. It highlights both fields that you need to consider. So pre-approval, there may be many different combinations that you have violated. We drill down to the one scenario and we highlight the fields that you need to correct. Oh, and real quickly, your ethnicity and race information is all over here. What we've done here is we've just displayed what was actually selected. If you need to edit it for some reason, we have an edit button and you can go in and you can make the adjustments as necessary. So finally, I did want to show you, oh, I know what I wanted to do. I wanted to show you this. So when I first imported my file, it came up to the statistics page. This is the errors tab. So this is going to give a synopsis of all the errors of all the loans for 2018. And what this is going to allow you to do is, now I only have 5 loans, so it's not a big deal. I could easily go through and correct these. Let's say you had, 100,000 loans or 5,000 loans, and you had 35 errors of the same thing. With any of these errors, you can click on it. So it looks like I have 2 loans where I have an applicant race issue. We'll immediately drill you down and show you, we'll filter just those loans so you can go and fix them. That might, allow you to have, if you have multiple people correcting these, somebody can focus on just purchaser, or we tend to have this problem. Why don't you go through and clean those up? They can very quickly drill down to those loans and clean those up. Ultimately, on our dashboard, last thing that's kind of nice is this color-coded pie that we've got here. Each color represents a certain category. So green means it's ready to submit. Then we have ones for, needs geocoding, has different errors, has validity errors. You saw me correct that one file and get to an okay. That's that one file there. And now I have a green slice of pie. Keeping in mind, I only have 5 loans in here. But ultimately, as you cleaned up all your data, even if you didn't go to that grid and you went to any reports, you could come right to this dashboard, look at this pie, and if that pie is all green, you are ready to submit. And that's my story, and I'm sticking to it.
Jenny, go ahead and give me back the screen for a second here. We are running just a tad bit late, but I have a feeling that you all, hopefully, we just have a few a few more just minor slides as we go through this, and then I don't know if we want to extend anything for any particular questions or not. But
we're not going to be able to today. So we have captured everyone's questions, and we're going to add the questions that we received from the previous webinar as well and combine those into one document that we'll make available to all the attendees shortly, as well as a recording of the webinar so that you can see it again as you need.
So I did want to go over just a couple of quick things, and then we can move off. Everything that you've seen today is again available from our two companies. So you can do import testing today with what you've seen for the new HMDA. As of the end of the month, all those tests that you just saw David do on our side will be available for you on your side if you're a customer of QuestSoft. So you have 3 full months. Calyx has been really on top of this. We've been working together on this, and it really works rather well. In the next 3 months, we have the option for us to go back and forth with customers and figure out how we'd like to do it better. So there is those particular items. There's another part of this that's available also for you right now. We have a sister product called Compliance Eagle that is already integrated in the services that you have, and that has a piece in it called Instant HMDA. You have the ability today under the current rules to go into that and to check on a per loan basis without the exporting and things like that, to go ahead and get your loans all cleaned up prior to anything else. In addition, they'll also do runs of a whole bunch of other things that we won't go into today. But the result of this whole thing is that it does come back to you with a screen that basically shows you exactly where to go back and to get that information. If you aren't a customer of QuestSoft, basically we're really well known. We have over 2,500 customers. Actually, we were a little bit below that a couple weeks ago. We've added a number since then, and we're pretty much everywhere in terms of where our customer base is. So with that in mind, I'm going to go ahead and give this back to Patrice, I believe, and yes. I think that I'm just going to land it on, I think, the page you wanted me to, which was a reminder about the upcoming
yes, about our upcoming user conference. Thank you, Leonard. Yes, so there's the information again in the URL for our user conference. Thank you all so much for joining us today. And again, we have captured your questions and we'll be getting those out to you. There are handouts. If you'll look to the right on your screen, there's a handouts section and you can download the slides as well as some additional information directly from the webinar now. And we'll let you know once the recording is posted. So have a great rest of your day, and thank you to Leonard and Janice, our presenters.